Thank you for having me again. So my name is Kevin Endler. I'm heading the quantitative portfolio management at Arcadis. And I was with the conference several times, and today I have both AI funds with me. I will heavily focus this time on the AI global equities. The second one I will just mention at the end with the charts and the results. And it's not cherry picking that I took the one that had a better performance. This is the one where we will also see historically what has not worked and what we have changed so that it worked. In this fund, what we try to do to combine is, on the one hand side, our long-term value investing philosophy, and the topic of machine learning, deep learning. And we do that together with the company Nascens. Jürgen Schmidhuber was already mentioned in the keynote. He's one of the co-founders of the company. And yeah, they do different topics, not only finance, also autonomous driving and stuff like that. And so we kind of combine the best of both worlds, so to say. We currently manage roughly 12 billion euros at Arcadis. And as said, we have a value philosophy since the company was started by Dr. Leber in 1994. And so if we now come to the actual philosophy that we try to incorporate into the machine, we first need to understand why we should do that, or why value investing should be a good starting point if you want to do long-term value investing with machine learning. And for those of you who read the annual shareholder letter of Warren Buffett and Berkshire Hathaway, you probably know this first page where Warren Buffett shows the annual returns versus the stock market. And then the second last line, you see the compounded annual gains over that long-term period, 1965 till today. And I framed it in red. He outperformed the market by 10%. So if one wants to use machine learning or deep learning for long-term value investing, it doesn't sound as a stupid idea to take the principles of successful value investors like Buffett, Graham, or nowadays Greenwald as a role model or starting point to teach the machines. So if we want to put the investment process of these value investors into a picture, one would see traditionally investors have performed a long-term fundamental analysis by studying the income statement, the balance sheet, the cash flow statement, and all the other publicly available information that one can get about a company's operations, read news and stuff like that. And then they use this to make an informed decision about the prospects of that company and hopefully come up with a successful investment like Coca-Cola. So just to mention it, we don't want to copy Warren Buffett. We just want to incorporate these principles. So to mimic in a way and be guided by these principles of long-term value investing. So in our fund, we actually just replace these human value models by artificial intelligence models. And also, because that's most of the times also a question, so the machine is not calculating a fair values how you would usually be used to when talking about value investing, but more like it is using a bottom-up approach based on fundamentals and not on price data. So if you do machine learning, it's also necessary to say when something hasn't worked well, and also to learn from it, of course. And as you can see, these are the first 2 years of the fund, and unfortunately, they were mediocre at best, I would say. And of course, you will probably ask, what were the reasons for that, or what went wrong? And because I don't have a lot of time, I will make a long story short. we gave the machine too much freedom, too many features to analyze, and analyzing sectors that the machine was not able to analyze. And therefore, after these 2 years, in the summer of 2019, we sat together, we stopped the machine, analyzed what or where we need to change something in the end. And we ended up with 2 major changes. So one thing was taking a new AI stock selection model, which is a graph neural network since then. And the second thing, to kind of like frame the machine a bit more, take a very simplified portfolio construction in the end. So the machine is really in a narrow task of analyzing companies and coming up with good stock picks, and not how to combine these stocks in a good way for a portfolio. And we just mimic the MSCI World sector and region weights with the top picks of the AI. So we don't take any bets on the sector or region level. And just for that you get an understanding of how these graph neural networks look like and how they work. So this is a very simplified version of what we do in the fund, but we have these points. These are stocks. In this case, we have 4 stocks from the same sector: Microsoft, Apple, Visa, and Samsung. And these companies are connected in a way to each other. And all these points are in a way described by different features that could be fundamental numbers. For other people, it might be something else, but in our case, in the fund, it's fundamental numbers. And then the machine needs to learn in this group, not against the whole market, but in this group, who are the outperformers. So who are the 2 companies that outperform the other 2 over several months, for example. And the machine gets a lot of these combinations. So it learns with hundred thousands of these groupings, so to say. And so this is how it works. And this is now the investment process on a more detailed level. On the left-hand side, we have our database for the machine, as such as fundamental data, just from developed countries, the MSCI definition. We exclude financials and real estate. I mentioned it. What hasn't worked in the first 2 years, and real estate was already from the beginning on not in the fund. And now 2 years ago, we also excluded financials because the fundamentals are too difficult in a way to interpret for the machine. Yeah, we have a market cap of 1 billion, at least for all the companies that the machine can pick. It needs a sufficient liquidity, of course. And what's also important is that we don't use any macro data. It's really just the fundamentals. Then the second pillar I already mentioned, we have a graph neural network, which gives us the companies in the sector that should outperform the market over the next several months. And the next pillar I already also mentioned, we have a simplified portfolio construction where we mimic the MSCI World sector and region weights. The stocks can be weighted between 1.5% and 2.5%. According to the machine learning stock selection score. We don't let the machine take any cash decisions, so we are nearly 100% invested all the time. And in the end, we have a portfolio of 50 stocks, long only. We don't do anything on the short side. The rebalancing is every 6 months. Actually, in July we have, so this month we have the next rebalancing, and the machine is not connected directly to the market, but we get, so to say, the portfolio and don't overrule anything. We just execute the trades. So, and after we did the changes in July to 19, now we have again 2 years of a live track record with the new investment process. And now it looks much more stable. And also, this is the results are in a way what we wanted to achieve. So the blue line is the fund, the red line is our benchmark. And till end of June, we outperformed the MSCI by 15%. And in green, I added also 2 human peer groups, the Morningstar peer groups for value and small cap. I will come to that in a second, why I used them to compare the fund, and also against them we are ahead. And on the bottom, you see the outperformance for every rebalancing that we do. So we kind of like set the outperformance to 0 when there is a rebalancing, and then we take a look at what the machine delivered after that rebalancing. And currently it looks like that now the third of fourth of the 4 portfolios led to an outperformance. And another thing that which is important, so if you do this investment process like we do it, of course you want to see if the things that you wanted to intend are also shown in the results. As said, we want to really focus on the AI company selection. And so what you see here are the portfolio attribution results of the fund versus the MSCI World. And on the left-hand side, since we did these changes, so on the left-hand side, you see the performance of the fund, which is roughly 52%. And on the right-hand side, you see the MSCI World with 34%. And the difference is our outperformance, and really most of it is coming from the AI stock selection with 14.5% out of 17 something. So this is actually what you want to see when you do the investment process like we do it. Now I come back to the human comparison. Why I've chosen to show you the Morningstar peer groups of value and small cap, because on the right-hand side, you see a spider chart, which shows the mean fundamental numbers of the portfolio versus the MSCI World. And if you analyze that, you will see that the I is currently a small cap value investor in a way, just from a factor perspective. But I always mention it as a disclaimer. This can of course change. So when the machine this month trains again with new data, it maybe come up with a new idea, and the investment style can also change over time. And just to give you kind of a flavor of what kind of companies the AI picks, I just brought you Coca-Cola Consolidated, so not Coca-Cola itself. The Consolidated company is the largest bottler of Coca-Cola products in the US. And we added, or the machine added this company in the January rebalancing, and it made 61%, so a very good result. And of course, if you also look at some of the fundamental numbers, you also see it looks very promising. Now I actually want to end up with 2 changes that we will have in the rebalancing this month. So one thing is that we will add a sustainability filter this month, and we will not add the data as a new input feature for the machine, but because one thing is that the history of these time series is not really large. I mean, for ESG, you have larger histories, but if you go for SDGs or carbon footprint data and stuff like that, there you don't have so much data, and then it's kind of hard to really do machine learning on these data, or at least to test what you would like to do. Therefore, it's really added as a filter at the end of the process, so to say. So we will put that into the portfolio construction part, so to say, so that we just have sustainable companies according to our definition. So we have an own sustainability filter. And a second thing where we have worked very long. To add that into the fund is textual analysis. And not textual analysis like a lot of people are doing it on social media posts and stuff like that, but more something that fits also to our investment process. And of course, if we use the earnings call transcripts, which are coming in quarterly, we get the transcript of that, and here you see the structure. There's a presentation part of the CEO or any other company representative, and then you have a Q&A session with analysts, and of course you can analyze the tone, especially in the Q&A of the company representatives and the analysts, and create some kind of tone or sentiment score on that. And just as an example, also a company that we have in our portfolio, Matador Resources. Here you see over time the tone of the overall Q&A session in blue for every earnings transcript. In green, the company representatives, and in red, the analysts. And this is a normalized score, so everything that is above 0 is positive, and below is negative. And here you see in the transcript of March that the analysts get more positive than the company representatives, which you don't see too often. And yeah, that's what we probably will add this month to the rebalancing. So the machine is not, though the machine is not only analyzing fundamental data, but also text. And then that's really my last slide. As said, I want to show you also the results of our second AI fund, which was also presented a couple of times at this conference. So the Arcadis AI Bust US Equities, which is where an AI successfully analyzes more than 50 million posts from online sources each month, and where we invest in the 75 most bullish stocks at that time. And the results are also very, very good. So if you look at the data since inception, 26.5% per year to 17.4% per year. So 9% outperformance in that time are really promising results. And of course, everything could be wrong what I've said. So thank you for your attention, and happy to take any questions.